Hey, good morning, everyone. I'm Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're going to get started here in a minute. We have a lot of people logging on. It's the top of the hour right now, so give us about another minute and we'll get started. So appreciate it for all of you that jumped on early. We really we have a good crowd showing up here, so thank you. Hope everyone's having a wonderful day. Here in Dallas, it's a little overcast and a little chilly, but you know, it's the holiday season. So we'll get started here in about 30 seconds. We still have a bunch of people logging in. So we had over 500 people register for this webinar. Just so everyone is aware, this is going to be recorded. So we will, whether you are able to attend or not, we will send you out a copy of this webinar. Also, this is an interactive webinar. We're going to dive deep into products. So I'll be manning the chat here. So you'll feel free to ask questions through the chat, and we'll get your questions answered. We'll get started here in about 15 seconds. Still have a lot of people logging in. So look forward to this. We've done 2 so far. Feedback has been really, really good. So hopefully everyone logging in is really, doing what they should be doing and looking forward to 2021 and how they're going to grow their business. So, okay. All right, cool. Let's get started here. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I've got Lisa Lee here with us, and I've got Carlos Betancourt. I'm going to have them introduce themselves in a couple minutes. But really what I'm here today is this is a product and a program webinar. We're not going to talk about Angel Oak's 6 securitizations this year. We're not going to talk about the $3.3 billion we closed last year. We're not going to talk about the benefit of our vertical integration. We're going to talk about products. And by the end of this webinar, hopefully you find yourself ready to go out, grow your pipeline, increase your 2021 business with non-QM programs. So without further ado, I'd love to introduce Lisa Lee. Lisa's located in Utah. Lisa, give us a little background.
Thanks, John. Yeah, I'm Lisa Lee, representing Utah out here. I've actually been in the industry since 1989, probably before some of you have been born, so we won't go into that too far. But I've been in, most of my career's been in the subprime, subprime world, and now, of course, the non-QM. I've been with Angel Oak for about 4 years, and it's been my privilege to work with this team. They rock, and of course, we're the lender, so it's even more fun. So anyway, thank you for having me today. I'm excited to hang out with you guys.
Yeah, Lisa's the top producer here at Angel Oak. I don't get to work with her day in, day out. That's unfortunate for me. But when Lisa's not helping you guys close loans, she's doing all things outdoors. So we love Lisa here. Love to have her on our team. Next, I'd love to introduce Carlos Betancourt. I'm lucky enough to have Carlos on my team, so I'm fortunate enough for that. Carlos, please introduce yourself.
Good morning, good afternoon, everybody. Thanks, John. I just want to say thanks for being here. Thanks for taking your time. I know everybody's busy. We want to do, I think we're going to do a really good job of getting you guys a lot of info to show you how to close more loans. The loans that you're looking at right now that you have no idea it was even a loan. And I think we may show you some cool new programs that are going to help you identify those loans and get you more business. So I'm in the Miami area. I'm going to help you guys out, and I want to be your partner. So reach out to me whenever you want and whenever you can, and I'm here to help. That's all.
Again, like Lisa, Carlos, when he's not helping you guys close your loans, he's spending time with his beautiful wife and 3 girls. So it's fun. I got to see Carlos last week, so I'm a happy guy. So anyway, so again, just what we're going to talk about here is really we're going to dive into products. This is interactive, so please, please, please use the chat feature. We want to answer all your questions. However, if we don't get to your question, please don't worry. We'll have your local account executive get with you one-on-one. We already have a question here. It's what differentiates non-QM from QM? Great question. Thank you. We're getting right out of the gate. We're getting some great questions. So both non-QM and QM have to satisfy the ability to repay. We may use alternative documentation, but we still have to satisfy the ability to repay. You know, the difference also between QM and non-QM, some loan limits. We have interest only 40-year terms, where QM only could do up to 30-year terms. Caps and fees, that's also another differentiator between QM and non-QM. QM is limited at 3%. In non-QM world, we can go up to 5%. And then borrower's debt to income, this might be changing somewhere in 2021, but in the QM world, usually capped at 45% DTI, we can go to up to 50% in the non-QM world. So hopefully everyone can see my screen. We're going to dive right into it. And you know, one of the things we love is our website. Easy to navigate, really intuitive. And right here, you look about our programs. We could go to program overview. This is all of our programs available to you today. And then, but before we jump into our bank statement program, we're going to do a short poll here. So we're going to launch a poll here, and the poll question is really going to be, who has originated a bank statement loan within the last 12 months? And we'll give it about 10 seconds. So Carlos, I've got people commenting here on how beautiful that background is there in the Miami area. You guys must be having a beautiful day. And then Lisa already with the celebration of the holiday season coming up. So pretty cool stuff and really good information from our chat session already. So we'll give the poll a couple of more questions, a couple more seconds, sorry. And then Stephen, if you could launch the poll. Oh, sorry.
Wow.
Hold on, I'm not sure I can see that right now, so I apologize. Lisa or Carlos, if you can see the poll results, what are they?
Yeah, 25%, only 25% have done any bank statement loan in the last 12 months. 75% have not. So
wow.
Great opportunity. Yeah.
Yeah, huge opportunity, Lisa. Like you say, I mean, you know, this is 50 to 60% of the non-QM business right now. So guys, this is a huge opportunity. I'm going to let Lisa cover the high-level details, and then again, as questions come in, we'll answer questions for bank statements. We're going to spend a good portion of our time on this because this is such a popular program. Lisa?
Alrighty, so our bank statement program, we've actually just increased the LTV back to 90% loan to value. So 740 score and higher, you can go back to 90% LTV. We will go down to a 660 score, which is awesome. Of course, no MI on any of our programs, so remember that. We'll do loans up to 3 million without exception, and down to 150K as well, which is a hard stop, so keep that in mind. This is, you know, we see a lot of jumbos on this product, obviously, because a lot of self-employed and big business owners purchase big homes. So keep that in mind while you're marketing out there. So we offer on this program, we allow 12 or 24 months business or personal bank statements. Keep in mind, whether you do 12 or 24, you still need to prove 2 years of self-employment. So we get that question a lot. This program still requires 4 years from a credit event, such as BK, foreclosure, deed in lieu of, short sale. All of our rates right now are based on a 30-year fix, so we don't have any ARMs available yet at this point. So on the business bank statement product, you're actually going to, the borrowers are going to have to be at least 50% owner of the business to qualify. And on the personal bank statement program, they just need to be 25% owner if they're business owners. This allows for purchase, rate and term, cash out refinances, of course, on primary, second homes, and non-owner OC. We just released a new enhancement on this program we've never had before, and it's our 1099 option, which, like I said, we've never had. So this is a great opportunity for those clients who are contracted employees, such as door-to-door sales for, say, solar or pest control. I'm trying to think of what they sell door-to-door, or people like traveling physicians are 1099 a lot of times. And what about those people with inconsistent deposits? Like, of course, our real estate agents are a great example of that. And of course, those people who can't seem to manage their bank account well and have some bounce check activity, which we see here and there. So this is a great opportunity. And then also, last but definitely not least, we released the 40-year interest-only program or product. And this enhancement is now on all of our programs, which is so awesome. So whether it's temporary or permanent, this is a great option to present to your clients, especially on those large loan sizes. So that's that.
Yeah, Lisa, great job, great overview. We're getting a lot of great questions in here. Carlos, one of the questions is, what's the difference between, I know you're going to get me on this, what's the difference between 12 and 24 months.
12 less months in bank statements, it's less months. And number two, you have an eighth off on the rate. So the 24 months review is going to give me a little bit better rate, and the 12 months is going to give you a slightly higher rate. Either one will work if the person qualifies, but sometimes not both work. So it's great to have that option to go 12 or 24 months based on what Lisa says. Maybe we have customers that maybe has some issues with, insufficient funds, and that's showing up in their banking history. That could be an issue that we may move on from if we use a better 12 months than one if we look at the full 24. What about deposits? Like Lisa said, inconsistent deposits. Maybe the previous months we had inconsistent deposits, and in the most recent 12 we're a lot stronger and a lot steadier. So maybe we'll do a 12 instead. So it's just about options for our customer, really, more than anything.
Yeah, guys, a lot of great questions coming in. Please do not forget to use that chat. We want to get to all your questions. Lisa, a question came in. How are we calculating? How are we coming up with the expense ratio for business bank statements?
Awesome. So we will allow, and this pre-COVID, we were only allowing up to 65% on the net deposits, and now we will actually allow them to go up to 70% of their net deposits. This is determined on basically the type of business that they run, how many employees they have, how many locations they have. So we're going to take a lot of things in consideration. We have a new form, which Carlos will show you when he walks through the quick qual as well, which is a business questionnaire form. We're actually having the borrower, or preferably their CPA, fill out this form to let us know about their business, give us some more information. Our greatest secret and our biggest the biggest benefit that we have is that we have a bank statement review team that works up front before we ever even send you a pre-qualification for your borrower. We are taking the bank statements, we're sending them to our bank statement review team. They are determining that they qualify, and they will send back to us, your account executive, what the net deposits that we can use are. At that point, we are then going to take a look at the type of business. We have our VP of credit risk help us determine what we can use for an expense ratio based on that type of business. And then we will be sending that to you in the pre-qualification, which is awesome, because then you can send it to the clients confidently, send them out to go and qualify for a house. So.
Yep. Great, Lisa. That answered a lot of questions there. Carlos, another question here. How long does it take to calculate those bank statements for you?
Typically 24 hours. Obviously, we want to have as much time as we can to make it done, to get it done correctly. But at the same time, I know we have to turn it back to our brokers as soon as we can, because you guys are waiting for an approval, you're waiting for an income, you're waiting for a DTI. You want to see if you have a deal. I think one of the most challenging things for us and in our business, especially those of you who've done a bank statement loan, is to make sure that, like Lisa said, not only do we want to get an income back to you, but we want to get something that is accurate and that we can support. We do have a team that runs through all the numbers, checks to see if there's any issues. So by the time we come back to you with an income, we're not going to now say, well, I'm not sure, and you're writing up a deal, putting it in underwriting, you're writing up a contract that the income is really, really not too solid. So you're getting into underwriting, fingers crossed. I know a lot of other investors do that. We don't like to do that. I don't like to do that. Neither does Lisa. So we want to make sure that once we write up the deal and it goes in, it's accurate. I think that's the most important word. We're going to get it back to you within 24 hours, but accuracy to me is the key.
Yeah, legit.
So Lisa, explain, you mentioned the 40-year fixed interest only. Explain a little bit how the interest only works and how we qualify the borrower, please.
So the borrowers are qualified on a full amortization 30-year fixed rate or payment. That's how they're qualified on it. The interest only works as it's a 10-year IO period, and then after the 10-year, it actually becomes a 30-year fixed at that rate. So it fixes in at the rate. Now it also has an automatic recast feature too, which so at the end of the 10-year period, it will recast for whatever they've paid towards principal at that point. The new loan amount plus the new full amortization of 30-year will be done at that point. So it's a 10-year IO.
Oh, awesome. Thank you, Lisa. Great questions, guys. Keep them coming in. Carlos, question came out. What's our max loan amounts?
Well, I'm sorry, John. My thing here broke up.
Yeah, Carlos, talk about loan amounts and LTVs, if you don't mind spending a few minutes on that.
Absolutely. Sorry. So max loan amounts, like Lisa said earlier, we're going to be at $3 million without exception. So we don't have to take it to a second level. Minimum loan amounts, which I know you said max, is $150. And we're typically going to cap out at a 90% LTV, either for 12 or 24 or business or personal. I know we get asked, well, what about if it's business? What about if it's 12? What about if it's 12 personal, 24 business? It doesn't matter. 740 score and above takes you to 90%. 660 to 739 will take you all the way up to 85%, regardless of the combination of bank statements, regardless of the months of the bank statements themselves. Okay.
Great. Thank you, Carlos. Lisa, talk a little bit about what kind of properties you can do on this.
So this property, I mean, obviously any of the properties, we're looking at large jumbos down to, you know, you can do condos. The great part is that we can do non-warrantable condos and take a look at those on any of our programs, which is great. We do not do condo hotels, unfortunately, Utah, but we, or nightly rental type stuff, but we do look at non-warrantable condos, and we run into this a lot throughout the country. So we have those. We will also, you know, take a look at the 2 to 4 units, etc., plus, you know, owner, second home, and investment properties.
All right, Carlos, go into a little bit more on the non-warrantable condo. You know, what's kind of our sweet spot? Everyone says, well, Fannie does that, Freddie does that. Kind of go into a little bit of depth about concentration, and then if you don't mind talking about what type of transaction, purchase, you know.
Yep. So on a bank statement loan, we can do purchase, we can do rate and term, we can do cash out. We can do that for investment, second home, and primaries. So it's a really broad program that allows you to do pretty much anything that the customer wants to do. What I love about the program as well is, and like Lisa was saying, across all our programs, we can do a non-warrantable condo, which means that your customer, especially in South Florida, anywhere, mainly in Florida, right, down here, we get a lot of issues with, hey, you know, this is a perfect customer, perfect deal, but my customer, just this condo that he or she loves, just doesn't have the amount of reserves. Maybe there's 80% investor concentration. I mean, really, we can do up to 100% investor concentration. That means the entire building could be second home occupants or investors. And if you're familiar with South Florida, or maybe in Orlando, you're looking at Brickell, you're looking at South Beach, you're looking at anywhere in downtown Miami, in Orlando, in Kissimmee, any of those areas that's high investor concentration. We're okay with that. So send us that deal. Don't turn it away just because you're like, oh, what do I do with it? Send it to us. So our non-warrantable program is fantastic, in my opinion.
It's awesome.
Yeah, guys, we've got great feedback from the audience. You know, keep those questions coming, please. Carlos, talk about a deal on the back of that. Talk about a deal that you recently closed that was maybe even outside our box, right? So if you've got an example like that, or Lisa, feel free to chime in if you've got something like that too.
Yeah, I you know, it's funny because we always talk about how we get those last minute, you know, deals, which are good and bad. Unexpected, it's like, hey, I got a big deal here. Or bad because, hey, I only have a week and I have to close it, or I have to close it in 2 days. So it gets a little challenging then. But I just recently closed a deal with one of my brokers, and it was again, perfect scenario, 760 customer. I mean, the guy, his words were, he walks on water. I said, well, why are you calling us? You know, well, two things. Number one, once they got the full tax returns, this is what I love about the bank statement program. A lot of our customers says, well, Mr. Customer made X amount of dollars last year and he qualifies. Well, fantastic. Did you get all the tax returns, all the schedules, the business schedules, K1s, 1120, whatever? Did you look at everything? Well, no, not really. And then that's when it all starts to kind of fall apart. Once the underwriter gets it, I got that sent to me. Was about a $900,000 loan, and the underwriter, of course, got all the schedules, ripped it apart, and the guy basically couldn't afford it. He barely almost could afford his primary residence, to tell you the truth. Once we looked at credit, so I said, hey, no problem. Let's get the 12 or 24 months bank statements. Got that income back. Fantastic cash flow. It was one of those slam dunk deals for us that we say, why would you let that customer, you know, why would you turn them away, you know? And a lot of loan officers do it because they don't know, because they are scared of the program. That's what Lisa and I do. We will do all that for you from point to point. We'll help you qualify them like we did with this customer. My broker was blown away. They got a nice commission check, and now they went back to their realtor like a rock star. Because guys, remember, I mean, not to talk too much about commissions and comps and stuff, but the realtors are are standing to make a whole lot of money in this transaction. So if that realtor goes from having no commission to you delivering, thousands and thousands and thousands of dollars on a commission check and a happy customer and referrals, that realtor is going to remember you and is going to do business with you forever. And that's what we did. It was more than just the loan. My broker was like, hey, you know what? I almost don't care about the loan. I want to keep my realtor happy. That's what he did. So.
Yeah. Great. Lisa, talk about, another great question here from the audience. Talk about payment shock.
So payment shock is, and I want to make sure that I don't say this incorrectly because it could be program to program. It's a little bit different. But on the payment shock issue, we do look at payment shock. It's basically going to be 250%. So they calculate a little bit different, but of what their current payments are. So we do look at what they are making now, what their rental or payments are now, or what their housing payment is now. And we are going to take a look at payment shock. So. And
Lisa, great. And one of the things, we talk about how great Lisa does her job, Carlos does his job, and all the AEs do. They will work with you. We're all paid the same way, right? But, we do a lot of deals that don't fit into our guidelines. So, right. Disclose all your information to your account executive, and they will help you work through the deal.
Please.
But another great question here, Lisa, I want to throw over to you is trade lines. What kind of trade lines are we looking at?
So what we want to see are 2 trades with 24 months history active in the last 12, or 3 trades with 12 months history active in the last 12 months. So you definitely want to take a look at the trades. We do need rental history, especially on this bank statement program that we're talking about. There is no rent free allowed on this program. You really need to keep that in mind. And if they've got some strong rent history and we may be lacking in some trade history, you can use those rents towards that possibly. And I'm just saying that's, again, is something we consider as an exception, but we can take a look at it.
Yeah, it's the overall quality of the file,
right.
And that's what makes Lisa and Carlos the experts in what they do every day. Carlos, talk a little bit about, a lot of self-employed borrowers have taken PPE. Talk about how we're going to look at that when we're calculating those bank statements.
Yeah, great question. We've had a lot of those scenarios, obviously, recently on the bank statement loans. So generally, PPE money, we cannot use that to qualify, right? I think it's pretty self-explanatory, as you can't use it on Fannie, Freddie either. So we do away with that. So one of the things that we have allowed in the past is once the money, the borrower has invested the money the way they're supposed to per the contract on the receiving of those funds, if there's some money left over, or if there's money reverted back to them as proceeds from reinvesting that money, you could use that money for your down payment and reserves after typically a few months. Again, we don't want you to receive PPE money today and try to use it tomorrow. Obviously, that's not allowed. But after it's been reinvested as it's supposed to be reinvested per the program requirements, you are allowed to use the balance of it, even if it's in a business account, because we do allow business account funds to be used as well on a separate account. It could be multiple business accounts. I get that asked often. Can I use multiple accounts for assets and reserves and maybe escrow money? Yes, you can. One to qualify the income, but multiples for the rest of the funds and PPE money as well. So kind of long-winded answer to this, but yeah.
No, Carlos, great question, because that answered about 5 or 6 questions here. So great job. Talk about what percentage of personal bank statements can we use, Carlos?
Yeah, that's great. A lot of people want to use or run their business through their personal account. Some of them use only their business account. Some of them have both, and they deposit it as they see fit. Hey, maybe I'm near Chase, and Chase is my personal account. I'm going to deposit this check here. Tomorrow I may be near Wells, and that's my business account. So the good thing is we will typically allow up to 100% of the qualifiable deposits into your personal account if you have a business account. So if Mr. Smith has a business account, we can show that. We need 2 months of proof. As long as I can show 2 months of proof that account exists, I can give you 100% of whatever's coming into that personal account, be it transfers, be it just cash deposits. Yes, we do accept cash deposits. So don't be scared. The customer could be an all cash business or a high cash business. We'll take that. So don't disqualify the customer, okay? So up to 100% with proof of 2 months of business bank statements. Great
question. A lot of questions coming in about income and how we calculate income. So great job answering these questions. We got another question about the business questionnaire. Lisa, you want to jump on that for how we handle business questionnaires and how we're looking at, additional expense ratios and so on and so forth?
Yeah, so the business questionnaire form, like I say, we at the time that we receive your 1008, 1003 credit and bank statements or your quick qual, we receive that. Your account executive will see that, and we will actually send you, the loan officers, a link with the business questionnaire form to send forward also, or just straight over to your borrowers. So they can fill it out themselves or for their CPA to fill out. It's really important that we get detailed information about their type of business and what they do as far as services rendered, as far as products sold. That sort of thing helps us to determine what their costs realistically are to do business. And so we have them actually state what their expense ratio is estimated for, what it approximately costs for them to do business. And then we actually, if it's filled out by a CPA, which is great, then we don't need any additional information for underwriting, which is awesome. That's difficult to get. So of course, if the borrowers do it, we just simply then ask for a letter only stating from the CPA what their percentage of ownership is at that point, because of course that's where everything is going to be determined. So, but so the 70%, depending on what it takes for them to run their business. So say for instance, it's a contractor. Obviously we know that they have high expenses. It costs them money to build homes, right? So, and they have workers, they have people that work for them. It's not going to be a one guy shop that's building a home and, has no expenses to go in. So, you're looking at a 50% minimum ratio. That's just the truth of the realistic piece of that. Now, if you're looking at a real estate agent, for example, they themselves don't have a lot of expenses. Maybe their company does marketing for them, etc. So they're going to have a much lower expense ratio. So we're really basing it on strictly, it's case by every case that comes in is so different. These businesses are a lot different. Everyone that comes in is a little different, and we've really got to make sense of what truly their expense ratio would be. And so we send it to our VP of credit risk. Our VP of credit risk does make that determination for us within that 24 to 48 hours, as we've talked about. So before we send that pre-qual, we are telling you what we feel we will allow for that expense ratio.
Yeah, and I think what's really important, what Lisa said here, and Carlos also mentioned a little earlier, you're not going to get that pre-qual until that has been hammered out ahead of time. So we know how valuable, those referral relationships are to you throughout the entire process. So just know it might take 24 to 48 hours, but what you're getting in your hand at that time is basically you can take that to the bank. So a couple other quick questions, and then we'll move on to another program. Keep the questions coming. Great questions. So what about reserves on files like this, Carlos, on loans with bank statements?
Yeah, so good question. So typically we're going to require 6 months reserves on the bank statement program. I think that I'm going to inject a little bit of my own personal opinion here. I think reserves are important. I know a lot of customers that do Fannie Freddie, just like when we do Fannie Freddie, we don't really worry too much about that. Remember that this is a different customer. Most of these loans are bigger loan amounts. These loans obviously have no MI, like Lisa was saying. There's no PMI, there's no MI. We're the end all be all if this loan doesn't perform. So as you guys saw, something happened earlier this year in March and April. It's kind of still going
really?
on. Yeah. And what happened is a lot of people, lost their income for a while. Some of them still have lost their incomes. So I think for us, it's a safe. I think it's very safe for us to say that reserves to a certain point are required, because we want to make sure that you do a good loan, that we do a good loan, and we put the customer in a good home. What do we do with a customer that is barely has enough assets to close, and something happens to work or something happens to the economy? God knows things happen every day, and that customer is now defaulting on a loan 2, 3, 4 months down the road. They can't get to enjoy their home because they just had no money put away. So I know some people push back on that sometimes, especially on the agency side, but on the non-agency side, I will say that minimum 6 months reserves is something fair. I stand by it, and I want to make sure that, like I said, the customer can be sure that if something happens, he's got a little bit of money put away to withstand any storm that could happen, that as we're seeing right now. So 6 months minimum. Yep.
Yeah. So and again, a lot of great questions. But we're halfway through, and we want to be respectful of everyone's time here. So we will go a little longer, but we definitely want to get through the programs. We can do a lot more Q&A after the top of the hour for everyone too. So we're keeping track of all the great questions that are coming in. Keep them coming. We're going to move on, but before we move on to bank statements, I do want to bring up a couple things, really highlights that Carlos and Lisa both addressed. These are luxury homes. It's self-employed borrowers buying luxury homes. And if you can increase that borrower's buy-in power by 2, 3, even 4 times, you are going to solidify that referral relationship with that realtor. So think about that, and think about a couple other things to think about is think about a cash out for that self-employed borrower. Maybe that self-employed borrower bought that house 10 plus years ago. We've seen the appreciation of real estate. They might want to do cash out. Don't forget about this program for cash out. And then last but not least is, 46%, that number, 46% is what refis are going to drop next year. That's what the Mortgage Bankers Association is telling us. And then purchases are going to be up 9%. I can tell you right now, 90% of our business is purchase business. And who doesn't want to go after those luxury homes? So just a couple things to leave with you on there on bank statements. We're going to roll over to our portfolio, so our platinum program. We're going to let Carlos talk about our platinum program. Carlos, hopefully everyone can see on the screen here highlights of our platinum. Carlos, take us through. We'll go through and spend another 5 to 10 minutes on Q&A for platinum.
Yeah, John, thanks. So platinum, I think, is one of our what I call a problem solver. We get a lot of loans that a lot of our customers call me and say, I have a fantastic customer. Everything's just beautiful in the loan. And what's my next question? Well, why are you calling me? Well, I'm calling you because it's a jumbo. And a lot of my investors don't touch jumbo, or you need a 760 and above to do a jumbo, or the max LTV is 80%, or this or that, or my ratios are only 35 over 40, and all these restrictions on jumbo that, again, you need an outlet for. What do you do with that customer? Do you just turn the customer away? Because we all know that our realtors, of course, like we all would, we're problem solvers. So if my lender can't help me with this jumbo program or this jumbo loan, well, I gotta go somewhere else, and I'm gonna take my business somewhere else. And I find that scary. As soon as that realtor goes somewhere else, you may lose them forever and lose all your FHA and conventional business. So that's more of another reason to do the bank statements and do everything. But anyway, platinum. Again, it's our problem solver. A customer that has doesn't meet the Fannie, Freddie, or agency guidelines, of course, because the loan amount. Even with the loan amounts now that are going to creep up Friday, I believe, they still want to borrow more. It's 700, 800, 900, a million, whatever that is. And what about that customer that had a short sale 5 years ago, 4 years ago? They had a deed in lieu of foreclosure. They bought a property, and for those of you in Florida, they bought a property. A lot of people bought properties in the West Coast, and the market kind of had an issue for a little bit, and they had to let that property go. But other than that, they're just fantastic. Maybe they bought an investment property and they had an issue with their partner when they bought this investment property, and they had to go and do a short sale. This program allows you, with a 4-year seasoning, to go do a jumbo loan up to $3 million. Is that $3 million? That's what I thought. So up to $3 million, and you can still do your primary. You can still do your second home. You can even do investment property with this program. So you can do 40-year AMs as well, interest only. There's so many good options there that unless you're just one of these big shops, and even those guys have issues, there's not a lot of investors out there that want to touch jumbo. Okay, and if they do, they're so restrictive that it almost makes it impossible for you to close a jumbo loan. That's what our program is for. That's what our platinum jumbo is for. Ratios are 40 over 50, so you get 5 to 8% more on ratios over anybody else. We can sometimes go. I've done a jumbo loan with a payment shock of 370%, so a little bit more than normal. So try doing that with Chase or anybody else. So again, it's a great problem solver for those jumbo follow-up loans that you may have. So.
Yeah, Carlos, you bring up a great point. For a jumbo program to go up to a 50% back-end ratio is really strong. Carlos, at least to talk about some of the LTVs allowed on this and the score requirements, if you don't mind sharing that.
Yeah, so on this product, we actually will now go back up to 90% LTV on this program as well with a 740 score or higher. We'll go again on this program, we'll still go down all the way to a 660 score as well. So below 740, you're at 85% LTV max on that, which is still awesome. And again, with a 660 score. And then, you know, you'll just see some hits for cash out, etc. We do have some cash out limitations, so it'll put you down to 80% loan to value, max cash out. But still, we've continued to increase these buckets and continue to make them more aggressive for, you know, the customers.
Great, Carlos. You answered a lot of questions there, Carlos and Lisa, with questions regarding, you know, payment shock and I think one of the things, Carlos, is, you know, again, get with your AE. Your AE will be the one to work the deal with you. Don't just, you know, we have an expression internally. That deal is going to get done, whether you do it or you don't do it. You know, we get calls. Carlos gets calls directly from borrowers. I get calls at least 3 a week from borrowers directly. They've been told no so many times that they say, let me go right to the source. They do their research, they do their homework, and Lisa gets calls every week too. So, you know, you have the potential, as Carlos mentioned earlier, you have the potential to lose that referral source. So, you know, and again, 46% of that refi market's going away next year, according to the Mortgage Bankers Association. So when that W-2 comes in at the end of this year, you know, and you're analyzing your 2020 business and you're planning your 2021, part of that refi market could be going away. So, you know, make sure you're going to learn this non-QM business. So, guys, I know we're almost 20 minutes of the hour. I'm going to move on from Platinum, and we're going to move on to our Portfolio Select. Lisa's going to take us through the Portfolio Select program, also another full doc program. But, you know, this can really help you save a lot of deals.
Yeah,
Lisa?
so this program is actually going to really help widen your scope of lending and help what you can offer to your clients. So the Portfolio Select program allows us to go down to a 620 score. It offers LTVs up to 85%. It's still loan amounts up to 2.5 million. So you can take a look at these borrowers who have happened to have a hiccup or, you know, need some type of Band-Aid for this. It only requires 2 years from a credit event, such as BK, foreclosure, deed in lieu of, short sale. It allows a 1 times 30 on the mortgage in the last 12, and on this program and on the bank statement program, we will consider people who have entered a forbearance agreement either on consumer or mortgage, as long as they have brought it current and made 3 payments since. So keep that in mind too. This is allowed on purchase, cash out, rate and term refinances, owner occ, second home, non-owner occupied properties as well. Of course, the non-warrantable condos still. The DTI is up to 50% on this program, so it helps those borrowers who are, you know, needing to get from point A to point B. Gift funds are allowed on this program as well. So it depends on the LTV. We do require 5% of the borrower's own funds with their reserves on a gift over 80. So anyway, and then the 40-year interest only is available on this program too. So it really helps to get them either temporary or permanently into a good loan. So.
Yeah, guys, you know, as everyone out there is looking for if you haven't already chosen, and we saw by the polls, I mean, almost 80% of people haven't done a bank statement loan, which is the opportunities out there. And if you haven't chosen a non-QM lender, you really need to make that your priority in 2021, because there's going to be borrowers out there who have had hiccups, and they're going to be, you know, they're going to get past that, and they're going to need loans. And this loan, this Portfolio Select loan, is going to be a great loan for them if they've had a bankruptcy or foreclosure due to whether it's COVID or prior to COVID. So these are, and then again, you're going to hear me say as of today, because programs are continuing to get enhanced. I don't know if I mentioned it earlier, but since COVID, we relaunched non-QM. We've had over 20 enhancements. That's almost 1 every 2 weeks. So stay tuned. You know, this is going to be a great page to come back and visit the website, and definitely stay in touch with your local account executive. Hey guys, we've got a ton of questions coming in here for Portfolio Select. I really do want to move on and make sure we cover investor cash flow, because it is by far our second most popular program. And I'm going to switch it over to Carlos. Carlos is going to take us through the ICF. We will get you. I'm not ignoring a lot of these great questions coming through chat. We will get back to you on some of these questions if we have time after the top of the hour. We'll get back to you, or if not, we will definitely have your local account executive answer your questions for you. I promise. We've done it in the 2 previous webinars. We will do it again. So Carlos, take over investor cash flow, please.
Hey, Don, thanks. So guys, this program is like John said, our second most popular, is one of my favorites, especially down here in Florida, in South Florida. It requires, I want you to pay attention to this, kind of like the good old days. You are not required to disclose the borrower's income or employment, okay? So this is just like the good old days, no income, no employment on your 1003. Your 1003 is gonna come in like this, right, blank. No income, no employment. I don't care if he's an investor, if they have multiple rental properties, I don't wanna see any of that stuff on the 1003. So all we're gonna qualify is the subject property, okay? It's an investment program. I'm gonna wanna see that the subject property, okay, covers or cash flows and covers my new mortgage. All right. Some people call this the DSCR, right? We call it the investor cash flow. The whole point, I don't want to get too complicated, in the weeds of specifics and guidelines. It's very simple. As long as the proposed rental income covers the mortgage payment every month, you're good to go. Okay. There's no other questions on this loan as far as the income goes. So think about that. If you're an investor and you're buying an investment property, does it make sense for you to receive $1,000 in rental income, okay, but have a $2,000 mortgage payment? Are you going to lose $1,000 a month on this program, on this property? Not really. A lot of investors don't get into an investment property to have negative cash flow. So do we. We want to make sure that at least the mortgage is covered. Now, a quick little caveat, a quick little tip here. At a 70% LTV, okay, and a 700 score, that DSCR coverage no longer applies. Okay, so I'm going to say that again. 70% LTV or under, okay, so 30% down at least, and at least a 700 score. Now I'm going to go back on the words I just said. Now it doesn't really matter if the program actually, the rental covers the mortgage payment. You can be actually upside down. When does that happen? We have a lot of condos in South Florida. The HOAs are very high. So the property would cash flow easily and comfortably, but unfortunately there's such a high HOA or something on it that it just makes it go in the red sometimes. We're okay with that at a 70 LTV, 700 score, okay? Remember, investment property only, no primary, of course, no second homes. You must have your primary. You can't be living at home with mom and dad, right? You can't be renting and living with your friends and want to buy an investment property. No, you don't allow that. You got to have your property. You got to have hopefully mortgage history for 2 years. So there's a couple of requirements. So we want to make sure it really is an investment property. And at the same time, guys, also remember, you can do a purchase, of course. You can do a refi. You can do a cash out. How many of you know a lot of private investors out there, or a lot of investors that own duplexes, triplexes, fourplexes that they bought with private money, paying 8, 10, 12, 13% on that money, paying interest only? So what about using this program? Call the customer, say, hey, Mr. Smith, let me get you out of that loan that you're paying 14%. Let me do it at depending on the LTV, let me do it at a 5.5%, 30-year fixed principal and interest, and you're actually going to pay down that loan. How many loans can you pick up overnight with this program? So again, I love this program. It's the easiest program in the world. Give me title, show me the funds where you're going to close, give me the insurance, and we're good to go. So remember, no income. We got to worry about all the other properties and does it cash flow into this, and give me the leases, and show me that you have investment experience. None of that applies. So great program.
Yeah, great job, Carlos. Lisa, we have a couple of great questions coming in here. What about the LLC? Give us some information regarding LLC, and what does it have to consist of?
So we can close investment properties in an LLC. It has to be a partner of max 2 partners in the LLC, and has to be an LLC that's established to manage properties, or that's involved with properties. So, but we will allow them to close in an LLC.
Yeah. So a couple of questions here. Why do and I'll maybe take this question is why do we require a borrower to have a primary residence? There are certain circumstances where we've gotten them closed where maybe the borrower lives in New York, or in an area really where affordability is hard, and they do want to become an investor. We'll get that deal taken care of for you up front at the pre-qual stage. Like we've said with all the programs, that's why we have experts like Lisa and Carlos on the call here. They'll take care of you up front. But the biggest thing is, if they're going to buy it as an investment property, but really it might be a second home or a primary, that puts us in an unenviable position. Sorry, easy for you to say. That puts us in a position where they could be buying it as a primary. So we really, really want to make sure that it is a true investment property. And we have a questionnaire we'll ask you as the broker to help us fill out so we can kind of make sure we're both going down the same path together. So that's a great question. We're not trying to put someone off who doesn't own a primary, but that is one of the guideline requirements. But again, work up front. It's not a definite no. These are guidelines, and guidelines are just that. They're just guidelines. And if we ask the right questions and get the right answers, maybe that's a deal we can save for you. So a lot of great questions.
I want to add one thing. I know we're kind of going fast. I want to kind of circle back on this program just because I get this asked often. And it just kind of came to my mind, and it's in the bullet points there. We typically, Angel Oak can do up to 5 loans for this same investor on this program, okay? We've had instances that we've done 10, 12 loans if it's a well-qualified investor. So if we're talking about a real investor that understands cash flow, has a nice portfolio, if it makes sense, we'll do more than 5. So the question is, can you do more than 1 loan? Yes, we can. And do we have a limit on other mortgages that they may have outside of Angel Oak? Yes, the answer is 15. They can typically have up to 15 open mortgages right now outside of Angel Oak, of course, and we can still do that loan for that customer. That's a lot of loans that are out there. There's a lot of customers that are very, they're leveraged to 10, 12 properties, 14 properties. They can be also technically they can have unlimited properties. Okay, so aside from 15 mortgage limit, you can be unlimited as far as your portfolio. I got a customer that has 35 properties. Can we do a loan for him? Absolutely. He has commercial loans. Can we do this property? Absolutely. So this is a fantastic program for your real investors.
Yeah, like Carlos says, and I know Lisa knows this also, do you want to come in with a stack full of tax returns? No, that investor doesn't want to go through that. And Carlos, you hit on a point here, and I'm just going to drive it home a little here also. The government, if they've got 10 investment properties financed, that's it for agency. We don't care how many properties they currently have financed. And as Carlos mentioned, we've had instances where we've done 10 properties for that borrower. So drive that home. Again, cash out. We've seen a great appreciation across the country in real estate. So people are looking to take cash out to continue to buy and fulfill their portfolio needs. So, don't forget about this. Is a great program. We don't want job information. We don't want income information on the 1003. We do want a list of the schedule of real estate, but great question. Lisa, do you have a deal, or Carlos, can you share a deal that you recently got done that, you want to?
Yep. Lisa,
I can't think of any ICFs. I know you have a ton down there, Carlos. I'm sure you can pull from.
Yeah, we get a lot of this, especially on, and Lisa touched upon it. Can we do it? Can we close? I have a customer that has all these properties, and he's okay with this, he's okay with that. Here's the number one, the biggest issue for this customer is he wants to close in an LLC. Sure. Well, he has an LLC for all his other properties that he manages real estate in. Can he add it to that LLC? Why not? So we're very flexible when it comes to that. We want to make sure we get the LLC information, confirm that it's obviously viable, kind of like what Lisa said, 2 partners and all that stuff, get all that taken care of. But we're not going to make your customer open up a brand new LLC and inconvenience the customer. We're okay with that. So this program is very adaptable.
Kalisa, talk about, another great question. This audience has been fantastic as far as questions. We really appreciate it. And again, we will get every question answered, whether it's today or within the next couple of days from your local account executive. Lisa, great question here is about a prepayment penalty. Is there a prepayment penalty on this program?
There is. That is a great question. It's important. There's a 3-year prepayment penalty that is standard on this product. There are options which we will show you on the pre-qualification for buying down or out. Of course, you want to consider that carefully when you're looking at those loans, and we do as well. But yes, there is a prepayment penalty. It's a 6-month interest penalty based on the yada yada excess principal balance. Anyway, yes.
I love the yada yada yada. I love that.
Just say 6 months interest because I don't want to calculate. But no, the other thing that's great about this product for us is that we have actually we have a separate team for these loans, and so these loans move quickly. They're efficient. They're awesome, and it's not connected to TRID, so we don't have a pre-CD wait time on these loans. They really move smoothly, and it gets them out of our mainstream underwriting as well. So it's an awesome product to get those investors in these places really fast. So
yeah, great question. Last question, Carlos, because we got 10 minutes to the top of the hour. Mixed use properties. Will we lend on mixed use properties on the investor cash flow?
Mixed use?
Yes.
No, we don't we don't lend on mixed use whatsoever.
Yep. And one more question I missed. What about reserves, Carlos, on this program?
Same. So 6 months as well on this program. Now, if you do a cash out, what's important is I'm doing one right now that the customer is going to use part of the cash out proceeds for his reserves. So 6 months, he meets it with the cash out. The rest he does whatever he needs to do to update 3 other properties that he's doing, which he's going to then refi. So yes, you could definitely use your cash out proceeds to meet the reserve requirement.
I know a guy who has a couple of properties in Miami. So, hey, we're gonna close out on cash flow here. We're gonna talk about one more program. It's our asset qualifier program, and we're gonna have Lisa present that, and then we're gonna get into some really cool tools and some ways we can help you grow your business. So, Lisa, please talk about our asset qualifier program.
Alrighty, this is an awesome program for your high-end borrowers that are out there that cannot or choose not to verify their income and employment. So Carlos just talked about the no income, no employment, no DTI for investment products. This is a no income, no employment, no DTI product for primary residence. So again, the way we ATR this is assets. It's not an asset depletion loan, it's asset qualifier. So this program starts at 700 score. It allows us to go up to 75% LTV, up to 3 million loan size, of course, the jumbos without exception, down to 250 is the minimum loan size here. So again, no employment, no DTI. The rates are 30-year fixed. This requires a 5-year seasoning from those large credit events such as BK foreclosure. Primary residence only, you can do purchase and you can do refinance on this program. The interest only option is available again on this, so that's a great tool to use too. The condos, the assets. So what we look for on this program, or the minimum requirements for this program, are they need to have at least 500K in post-closing assets in post-closing, plus 5 years debt payments, and then of course they're down in reserves to qualify. Now that can change depending on what their new loan size is going to be, but that's the minimum requirement for this. The cool part is we just reduced the seasoning on this, so it used to be 12 months. Now we only require 6 months seasoning. So all we ask for on this program is one of the most current, so the most current statement for the assets that we're going to use, and one statement from 6 months previously, not all 6 months. So 2 statements from their assets. They must be in a personal account. It can't be in a business or a trust, but and anyone who's on it must be on the loan. But it's a real quick, easy qualification loan for these people who just cannot or choose not to deal with their employment situations.
Yeah, and like our bank statements, we have a worksheet that our account executives can share with you to kind of get us in that ballpark for calculating those assets. This is great for someone maybe who is with a large tech company. Maybe they just decided to go start their own business. Someone maybe who's been through a divorce and came into some great assets, and so think outside the box when you're talking to borrowers. Ask those second, third, fourth level questions, and reach out to your Angel Oak local account executive. So with that, Carlos, anything else to add to asset qualifier?
Oh no, I think you guys really touch on everything. I think a lot of the customers we see on asset qualifier are people that have had some money set aside and say, well, I'm not doing anything with this money, and it's been sitting there, and I want to invest it, but I want to sell another property, and so it gives them a lot of flexibility to now, without using income or employment, they're still able to buy a primary. So this program is fantastic for those customers that do have a little bit more money put away. Yep.
Yeah, great. And great job, Lisa and Carlos, on the programs. Really, I know there's a lot of questions out there we haven't gotten to. We got 5 minutes to the top of the hour. I do want to go into our great tools here, and we're going to have Carlos walk me through our quick quote tool here. Carlos, give me some scenarios here.
Absolutely. So John, I always want to say two things. When we have a very accurate online pricer, what you see there is called Quick Quote. Okay. Now, I want to always point out that I love this tool. It's an extremely accurate tool, but never disqualify your customer without calling Lisa or calling myself. If something doesn't show up there for whatever reason, it could be an input error, the system could be down, God knows what happens, and you say, well, forget it, it's not there, let me just go somewhere else, or call the customer and say, oh, sorry, can't help you. No, don't ever do that. Obviously, talk to Lisa, myself, or your local account executive, and we'll help you through the pricing to price out your customer specific scenario. Okay. Now, additionally, make sure that when you price it out, you consider that when you'll see it now, this is going to give you typically your par rate. So some of your lenders have lender paid option. So make sure you're careful if you quote that to the customer. Lender paid will affect compensation and will affect a lot of things. So again, always check with us first before you go and you maybe run this by the customer. So John, let's go ahead and use what are you at, 750,000? Fantastic. So we have a customer that has a $750,000 loan. He has a credit score, he or she, of 740 and above. Maybe they're just sold this big house and they have a nice down payment to put. Let's go 65, perfect. 35 down payment, 0 times 30, which means they haven't made any late payments in the last year. It's a 1 unit property, single family. We can also do condo. So John, do me a favor, can you hit the property tab again, and let's show everybody there that's 1 unit. Now go up to the 1 unit. Sorry. There you go, boom. You can also do it on condos, okay? So we're not gonna limit that. But let's go flip it back to 1 unit. We do make the distinction of 1 unit and condo. Now it's a purchase transaction. Let's say again, the one we started with, which was the bank statement program. My customer can't qualify. I saw the tax returns. It ain't gonna work. Let's go with 24 months business bank statements, owner occupied. So let's look at that. We're looking at a 4.250 rate on a 30-year fixed program. This program, if you look at the bottom, has additional information there. This is a 30-year fixed, guys. No prepayment penalty. Okay, this is a P&I rate. Okay, this is very similar to a lot of these jumbo programs where you have to give me your tax returns that you may not qualify. Look at that. It's a 4.250, 30-year fixed, and the customer is going to love you because you're giving them a great rate, you're giving them the house, you're giving them the ability to qualify, and the realtor is going to love you even more because you're going to put a commission check in their hands. Okay, so now let's go ahead and flip that, John. If the customer says, hey, you know what, I'm going to keep all the cash, I got to redo the pool, got to redo the kitchen, I got to do some other stuff. Let's go max LTV 90%. There you go. You're at 5.874. Okay, fantastic rate, extremely aggressive rate there. Again, I never like to, and I always like to remind all my brokers, never let the rate scare you. Even if it's a 4.2, no matter if you give them a 4.2, they're gonna want a 2.2 or a 1.2, right? So no matter what, I think we can all agree. I've been doing this since 1989, and no matter what rate and what market it's been, the lowest rate possible, they're still gonna say, oh my God, that's so high. So I think that I always want to remind you guys, this customer that is getting quoted this rate and is doing a bank statement loan, this customer cannot qualify through the traditional formats. More than likely, even though they don't tell you, they went through their bank, their personal banker at Wells, at Chase, and whatever, and say, hey, Bob, I love you guys. I want to do this loan for you, but these tax returns show that you don't make enough to qualify to even buy your doghouse. So I'm sorry, I gotta let you go. So do we want to go ahead and give the customer some fictitious loan or fictitious rate, or do we want to give them a loan and put them in a house? So again, for my loan officers, don't be afraid to discuss rate. I'm happy to discuss a lot of ways that you can go ahead and address this with your buyer, but lose the fear. I know a lot of times Fannie, Freddie, it's all about rate, because they're shopping you with 50,000 other people. That's not happening in this program. That's not happening with this customer. And this customer, especially if they're a customer that owns a home, don't forget the fact that you also have a tax benefit at the end of the year. Okay, so the effective rate is not your interest rate. So your 5.875, after you add your tax benefit, you have an effective rate of 1.125. So about 4.25, 4.5 maybe, that's your actual money you're paying on, the money that your cost that you're paying on your money. So that rate should be a 4.5, for example, after you add back that tax credit that you're going to get at the end of the year. So don't forget, explain that to the customers. That rate is really not what you're going to pay. But again, I'll leave it there.
Yeah. Yeah, and I know, if anyone does have to jump off, this is going to continue to be recorded. So, if you have to, we respect your time. We will go longer. We'll show you how to get a 1003 and a credit report to us. One other thing though, Carlos, and Lisa said it when she was presenting bank statements, this is a 90% loan to value, no MI. So talk about the payment too when you're talking to this borrower. And when you talk to this borrower, tell them to go to their CPA and tell them what they should be writing off on their taxes versus paying this payment versus the rate. The CPA will tell them to go this route.
John, again, that's something that we always want to remind you, all my LOs. Mr. Customer, last year on your tax returns, you showed 25 grand of income. For you to qualify for this loan of 750,000, you have to show maybe 200,000 because we're going to do a 2-year average. That means you have to write Uncle Sam a check today for 110 grand. Do you want to write a check for 110 grand, or do you want to have a slightly higher interest payment that even if you divide that 110 grand into that payment, it's going to be 1,000 months before you recuperate that check you just wrote to Uncle Sam? Which one is it, Mr. Customer? Again, this is a no-brainer.
Yeah, so Carlos, great point. So want to move this along. Great points, great selling features. Carlos and Lisa, unbelievable job. Carlos, so if the loan officer says, okay, I've talked to my borrower about this, how do I get you a 1003? How do I get you a credit report? How do I get you the bank statements?
Easy, super easy. Like I said, we do all the work for you. All we ask is for you to go, after you've priced it out, click on the select button. You're going to go ahead and select the program.
Go ahead.
That's going to take you now to our 3.2. That'll be available very shortly. You'll be able to send us your 3.2. But let's skip that for a second. Let's go to next. We'll make it a little bit easier. You're going to go ahead and select your account executive that you're working with. You'll drop down. You go to Lisa Lee. You'll enter your company information. I would work with Lisa Lee as well. I don't blame you. So you put your company information, obviously loan officer, all that information there. You're going to drag and drop your 1003. You're going to drag and drop your credit report, and you're going to drag and drop your questionnaire or all your bank statements right there for you. Okay, very simple. It'll probably take you, this whole process will take you about a couple minutes, and that's all you have to do. All we ask is, of course, the 1003 be accurate, that you have all your bank statements there. If you're going to give me 24 months, don't send us 22, or else we're going to have to come back to you and say, hey, I need 2 more months. Don't send me old bank statements that the last ones you pulled were from July of 2020 or in at least through November. It can be the most recent bank statements. Put them on there in the system and hit submit. If you want to send us additional comments, you can. There's an additional comment section. Say, hey, Lisa, this is the program, the deal we spoke about for Mr. Smith. I'm sending it to you for review. You hit the submit button, it comes over to us, and we'll get started on getting that income review for you.
Yeah, I mean, and if you can get the 24 months up front, we're going to calculate the income. So you and your borrower don't have to do anything. We're going to calculate it for you. We talk about rate sensitivity in this market. As Carlos mentioned, I believe it's an eighth better in pricing if you go with 24 months. Let us determine what you should use and determine if you should go 24 or 12. But give us the 24. Let us calculate it for you. So great, Carlos. Great job covering some of the tools. In addition to other things on our website, we've got the ability for all this information, resources and documents. I'll cover a little bit of this. These are how-to training videos, how to request disclosures, how to submit a file. All this information is available to you. I'm telling you, if you haven't sent us a loan yet, and if you are going to send us a loan, we appreciate it. Spend a couple minutes watching these videos. It could save you days in the process. So I know a lot of times what happens with these loans is they've fallen out somewhere else and no one wants to go back and check the seller because there's 10 other offers on there. Take a couple seconds, review these videos. It will save us days in the process, I promise you. So all this information is available here. Lisa, I'm going to let you take us through the marketing portal and some other fun things that we can help everyone on this call grow your business in 2021.
Yeah, that's awesome. So obviously, this is the portal. This is where most of the business is done, all the business is done. So your underwriting portal. Of course, your processor will spend the most time in here, but for you, the loan officers, the most important part to me of the portal is the marketing portal tool right there. So this is so incredible. You know, you guys are marketing a ton of different products. We have the best marketing team in the country, and all we do is non-QM, right? So we have already created these customizable marketing tools for you to use in your company without having to rebuild it yourself or worry about verbiage, etc. So we have the marketing flyers, which are customizable. You just go in, fill in your information. You can send them to your borrowers or whomever agents digitally, or you can send them, you know, or hand them out. We've actually also created flyers for not just your, you know, just your agents or your borrowers, but also CPAs, financial advisors, you know, all of these attorneys, different people that you can market to. We've created tools for that. So we've got these excellent flyers, but also we have social media posts. Sorry, I'm just cruising you on.
I'm getting there, Lisa. Sorry.
We have these social media posts. Pardon me.
I did want to back up one thing here, Lisa. I apologize.
No, you're great.
Is the pre-qual stage, to do a quick qual with us, you don't have to be an approved broker. You don't need login credentials. Just want to make sure every here. To get to this portal, you do have to be approved, and you do have to have access. So I'm sorry, Lisa, go ahead.
No, that's perfect. So you'll see here, these are great for you to post on your social, you know, when you're using your social media, which of course is huge for all of us to use these days. There's nothing Angel Oak that is shown on here, so it's all coming from you and your company. We also have a presentation, a literal slideshow presentation for your agents, you know, and you become the pro in the non-QM. So this is awesome. Not only do we have the presentation here, we also have the event flyer, so you can get it out to your agents, let them know the time, date, place, and it's great. It'll guide you right through non-QM. It's exactly what we use as account executives. It'll walk you through it. So if we can't be there with you, you definitely have this on your site to use. And then we have whiteboard videos. We have all kinds of great tools for you guys to use as far as the marketing goes. These are the whiteboard videos. Now you can't customize these per se, but there's nothing Angel Oak on them, so it really drops a thought into people's heads when you're on Facebook or on your social media. So.
Yeah, Lisa, you touched on a lot of great parts here. I know we kind of sped through we sped through the end of this, and you know we're 7 minutes past the hour. We still have a lot of you on this call. We really appreciate you. But I am telling you, one of the most powerful presentations will be that realtor presentation. We present on your behalf. If you have your local account executive, I'm actually doing one on Thursday afternoon with a loan officer out of Houston, with our AE in Houston, Frank Nolan. We're going to tag team it. We don't say anything about Angel Oak. We present on your behalf. We just tell them we're one of your investors. And every time I've done one of these, whether it's in person, most of them we've done in person prior to COVID, but the realtors get glazed over because they think about the opportunities missed. So on your behalf, we'll present this for you, whether it's through a webinar, Zoom, whatever you want to call it, or, you know, as COVID starts to hopefully get more in our rearview mirror, you know, they'd be able to do it in person with you. So, Carlos, I'll throw it out to you, and I'll say anything you want to close with, Carlos.
Yeah, I just want to remind, especially all the new loan officers, that they always ask, well, how do I grow my business? How do I differentiate myself from everybody else in this market? So I will humbly say that these programs and ourselves, our team, can help get that for you, can help differentiate yourself from a sea of loan officers and competition out there. So you're competing against all the LOs in your branch, in your company, in your area, in your block, in your street, every bank, every credit union, everybody, all the websites, the onlines, the .coms and the rockets, and everybody has a mortgage website. So I love to use these programs. I'm not going to mention their name, but I'm going to steal the moniker that they use. It's called the wedge program, you know, or the crowbar programs, what one of the big brokers calls it, because they're able to get a presentation, a meeting, a lunch meeting, coffee, whatever it is, with that top producing loan officer, realtor that hasn't given them the time of day. Why? Because every realtor at their disposal can probably just show you 300 loan officers that they can call on their cell phone in 2 seconds, right? Well, who does he call? So these programs are going to help make you, you know, show them that you bring value to the relationship. Because if they can see, well, you know what, every time I go to Lisa, Lisa has investor programs. She can do my self-employed programs. You know what, I sent a deal to that guy, Bob, down the street, and it's a big loan amount. And if it's not a perfect loan, man, Bob always has an issue with it, or he always turns it down. And my question is, how many of those Bobs have turned down loans that cost that realtor a big commission check? Eventually, he's going to stop sending deals to Bob. But if you're Lisa and you have these programs and you go, hey, Mr. Customer, Mr. Realtor, if you work with me, you know, in our mortgage company, I can get you qualified. I can qualify your customers who are self-employed or bankruptcy. My whole programs, my pool of programs is this wide. And especially in our market, everybody has an issue. This one's self-employed, the other one had this, and the other one had that. And it just makes you a lot more marketable, a lot more attractive to those realtors. So don't forget it. Like John said, we'll do the work for you. We do the income for you. We market, present, do everything in your name. Angel Oak doesn't show up. So it's just sometimes I wonder why more loan officers don't use these benefits. But again, I hope you're not one of those loan officers that just kind of forgets about this. So I hope to work with you guys very soon.
Great. Lisa, I'll let you close out on some things maybe you want to share that maybe we didn't get to. Again, a lot of questions here. What about, Lisa, one of these we didn't talk about, you know, where do you find these outside the box, or who would you recommend some people reaching out to? Like, I'll give you kind of CPAs. We talked about CPAs, right? What else would you recommend people using our programs and our marketing materials to reach out to certain segments of businesses? Name a couple others that come off the top of your head.
You know, I would say banks, credit unions, loan officers, they are so limited to the programs that they can offer, and they need outlets. They want to be able to take care of their members. So that's a huge thing. Bankruptcy attorneys, divorce attorneys, apartment rental places. We've got some great rental flyers, you know, gosh, it just open your world. Insurance agents, anyone that you in your sphere of influence that you do business with should know that you can do these type of loans, because everyone knows someone who's self-employed that can't seem to get financing. And so I think opening your thought process to who your sphere of influence is and people you work with, you know, it can be marketed to everybody.
Yeah, so a couple of things I'll leave everyone with. Again, refi is supposed to drop 46% next year, right? According to the Mortgage Bankers Association. Purchases increase at 9%. Don't be the loan officer that doesn't want to do these deals because you think you're too busy. So anyway, I'm going to end it on that. Lisa, I love you. Thank you for participating in this. It was so much fun. Carlos, love you also. You know, and on behalf of Lisa, Carlos, the Angel Oak family, we wish you, your loved ones, a safe, healthy, and happy holiday season. We want to thank you, everyone, and we will get your questions answered. I promise. Have a great afternoon, everyone. Thank you for participating.
Thank you.
All right.